Hi friends, today I'll explain you default loss guarantee. What is DLG? So a regular, here two parts are there. One is two main parties are there. One is regular entities, another one is LSP, loan service providers. Regular entities are all our commercial bank, rural bank, all these even housing finance companies, they'll come under regular entities. So these regular entities, they'll do the digital lending. For digital lending, they'll normally regular entities they'll tie up with some LSP partners. They'll do the LOS, and then document collection, verification, underwriting, and then address verification, photo verification, KYC verification. Everything will be done by LSP. Finally, disbursement amount will be taken from regular entities. So during this process, you may get guaranteed loss. So for example, for this, for example, if you are giving a loans of 100 crores, so in that you'll have a guaranteed loss. So default loss guarantee, some portion will be there. So to cover that one, we can go with agreement with LSPs about the default loan guarantee amount. So during the agreement itself, you have to mention, regular entity should mention what is the percentage upfront before agreement itself. So if your portfolio is 100 crores, 5% means 5 crores only can come under default loss guarantee for the regular entities. This should be mentioned clearly upfront before going for the agreement with LSP. So scope, all commercial banks including small financial bank, primary cooperative bank, state cooperative bank, central cooperative bank, non-banking financial companies, including housing finance come under this scope. So regular entities may enter DLG agreements only with lending service providers. So loan service providers or lending service providers, they'll go with agreement a certain amount. So these LSPs will be loan disbursement. For the loan disbursement, regular entities, they'll have a tie-up with LSP. Same LSP will give the guaranteed default loan guarantee amount also. So these LSP must be incorporated as the Companies Act under 2013. So all these LSP should be incorporated as a company under Companies Act 2013. Already discussed all the regular entities already have given. LSPs have given in example, Lending Craft, Neo Growth, IE, Zip Loan, Incred, all these are LSPs. So while regular entities disbursing loans through digital lending through LSPs, you will get a DLG from the LSP. So what is the structure? So what is the cover? What is the claim period? Okay, what is the disclosure guidelines? What is, whether you have to maintain a cash deposit with regular entities? For example, if you are lending 100 crores, so 5% will be default loss guarantee. Then that 5 crores cash should be kept with regular entities, or you make a deposit in another bank and mark a lien for regular entity. Everything you have to mention, who bank guarantee favoring, everything you have to mention in the agreement. So what is there any cap for the DLG? Yes, 5% is the maximum. If your portfolio means all your loans, it may be small loans, big loans, some will be 5 lakhs, some will be 1 lakh, some will be 50 lakhs, and some will be for the 5%, some will be 7%, some will be for 2 years, 5 years, 10 years. All includes your portfolio. In that portfolio, your DLG cap is 5%. More than 5%, you can't go under DLG. Recognition of NPA. Already loans are classified in NPA, and you're prepared already you're preparing a provision, loss provisioning for that loans. Those loans should be uh, uh, separately kept, and the norms will be separate for NPA and separate for the DLG. So any loan under DLG, if you get any money or you realized any money from DLG loans, that should be given to DLG provider. Treatment. So you should treat as a normal individual loan, and the DLG loan should be, both are same. Invocation. So what is the claim period? 120 days. And if you keep this is the overdue period for 120 days, you classified as the DLG, but within 20 days it has come to regular, and he is making payments and the borrower is good, then it should be removed from the DLG. So what is a tenure? In a portfolio, you have different term loans. One will be for the 5-year term, one will be 10-year time. So in your portfolio, maximum loan period is 15 years, means your DLG agreement valid for 15 years. So we'll take the maximum tenure of the portfolio. So one will be 2 years, another will be 15 years. So one loan, if it is there for 15 years also, your agreement will be valid for 15 years. Disclosure. So what are the open point you have to publish? So whatever the DLG agreement executed with LSP, they have to publish the DLG agreement in their website, including the amount and total amount of the portfolio, and what is the period, everything you have to publish in the website. So due diligence, if you are while selecting DLG, you have to do all your, you have to take a board approval, then you have to do the eligibility criteria, their fast track, everything you have to verify. Then only you should go for the agreement with LSP as a default loss guarantee agreement. Any exceptions? So these below loans, if any loan given under the schemes will not be covered under DLG. So credit guarantee schemes of credit guarantee fund trust for micro and small enterprises, credit risk guarantee fund trust for low income housing, individual schemes under national credit guarantee trust. All these under loans under these schemes will not be covered under a default loss guarantee scheme. Thank you friends. If you like my video, please subscribe and share with your friends also.